Thank you for being with us. Today, before we start, all of us who are in academics are aware of bad news that came early in the morning. Former President of Bombay Management Association, the first Vice Chancellor of NMIMS deemed university, Dr. N.M. Kondap. Thank you for being with us. No more with us. He passed away in the morning. Many of us who had worked under his leadership with him in NMIMS and otherwise will remember Dr. Kondap for his diligent work and many other qualities that we all have been touched with. BMA will definitely have an impact because he was very active in BMA till the last week. I spoke to him for the awards that we are considering for 21-22. Let us observe silence for a minute to pay our homage and pray for its Sadgati to the Lord. We will keep 1 minute silence and then our webinar has to continue. So I will request Rajesh ji to take over from there. We will observe a silence for 1 minute for Dr. N.M. Kondap. Om Shanti Shanti Shanti. Rajesh ji, please take it over.
Yes, thank you, Kavita ji. So for continuing with our Friday fundamentals next session, today the evening session is very unique and very recent and of interest of everyone, which is getting to know the budget in detail. And for taking up this session today, we have very learned personality with us, which is CA Dr. Vishnu Kanhere. I mean, when I was looking at his degrees and the certifications which he has got, I mean, it was difficult for me to remember all of them, sir. But I will take an opportunity and privilege to introduce him to the audience. Dr. Vishnu Kanhere is a practicing chartered accountant and a certified fraud examiner. Besides his other acclaimed degrees and certifications, he was awarded PhD in management from JBIMS for his pioneering research on valuation, concepts and practices in Indian industry, covering intangibles like software. He is a fellow member of Institute of Valuers. He has over 30 years of experience in consulting, assurance, and taxation for listed companies. His academic achievements and hands-on working experience reflects the wide canvas on which he operates. Dr. Kanhere has a deep insight into macro and microeconomic issues and in the field of finance. He has written the first ever book in the world on software valuation. He has several publications to his credit, including a chapter in his book on computer frauds, which was published by Villay. Dr. Kanhere has been a keynote speaker at national and international conferences and seminars on a wide range of topics. He was an independent director on board and chairman of audit committees of large listed companies. Dr. Kanhere is the recent recipient of prestigious Bharatiya Shiromani Puruskar awarded by the Institute of Economic Studies for the year 2009 for enhancing the image of India through his outstanding contribution in his chosen field. He has been awarded the prestigious Fellowship of Linnean Society of London in 2010. So, Dr. Kanhere, we welcome you to the group and thank you very much for taking us time. And I'm sure your insights and your expertise in the area will help our audience to be aware of as you were saying before the session, in between the lines, what goes in the budget, because what we read in the newspaper is what they want to convey. But I think, as you rightly said, that there is many more which needs to be understood. So thank you very much. All is to you, sir.
Right. Thank you so much for your kind words. In fact, they were excessively kind, I think. So, but I'm always happy, and it's really a very happy occasion. And I'm thankful to Kavita ma'am, our Honorable President, as well as Rajesh Bhai, you, for having invited me to share my thoughts here. See, actually, I don't consider it as a very formal occasion of sharing. So although I have a PPT, I'll just be sharing my thoughts and views on the budget. The reason is I am a life member and I have been so for a number of years. So in between, for whatever reason, you know how things keep changing, the focus keeps changing. So I may have not been so much in touch, but before that I was very active in the association, as far as writing articles in BMA magazine is concerned. So it's like, I mean, even before Arya's time, then when Dr. Murthy was there, so a lot of happy memories come back. And so it's nice that because ma'am invited me, I could once again connect up with BMA. So thanks so much for that. And please feel free to interrupt me, although we have that half an hour session, so it can be done. But in case you need any clarification in between, I don't have any issues. You can interrupt me. So I think let us begin quickly because we have a limited amount of time and a lot to cover. Let me see here. I think this is the one, if I'm not mistaken. Correct. I'll just put it into full screen mode and that will take care of it. 1 minute. I'm just checking out that it is the one. Correct. That's the one. Okay. So first of all, as I had discussed, I had occasion to discuss what exactly should I cover, because it is essentially a management association. There would be industry people, top management experts. There would be people from academic field also, and also students. So I thought I'll just quickly deal with this. What is the budget? Those of you who are aware of it, of course, pardon me for covering it. See, what should we look at the budget as? As many stakeholders are there, all of them look at it in their context. For example, those who are salaried employees, maybe I will say somewhere in middle or lower management, or those who are blue collared workers. Primarily, their interest is to understand what would be their tax in the future and does it affect their industry, what affects their industry. Similarly, most of the industries, their perspective is, oh, how does it affect me? So you find across the cross section a lot of people discussing these things, whereas there are some people who look at, especially industry leaders, top managerial positions and others, they look at the overall impact on the economy. Those who are stockbrokers and investors and those connected with the capital market will more look at how it will turn out for the capital market. But what is it in reality? In reality, it's a policy statement of the government. So what the government does is, by sharing a wish list of what it plans to do in terms of expenditure and what it plans to do in terms of initiatives, It gives a statement of the different policies which is going to pursue to take the country forward to the next year. Just before that, it also tables the economic survey. So that gives us some kind of a check on what state we are in. So the state of the economy, the state of the country is first captured in the economic survey, which is presented to the parliament a day before. Earlier, of course, we had the railway budget separately coming in. Now it's a part of this budget itself. So there is no separate emphasis or mention about railways. In fact, if you will there's a Word document of the budget speech also available. If you do a quick search, you will find that probably the word railways doesn't appear at all in this budget. So also, if you look at pandemic, that pandemic word surprisingly, and COVID, if you look search for that, it's just an incidental and aside. I want to lighten the atmosphere. You will find it only 2 times, the word COVID, and pandemic you will find 10 times. But the document is a 10,000 word document. So again, that doesn't find much mention. So as we were discussing, it's a policy statement of the government, states what are the policies which it is going to pursue. Policies in terms of capital expenditure, policies in terms of emphasis on various sectors of the economy, also on initiatives which it may want to float. The second aspect which it gives is the income and expenditure estimates. So for the coming year or the forthcoming financial year, what would be its income? So how the rupee will come in into the government's kitty and how it will be spent, how it will go out. And apart from this, the finance minister, as a part of the budget documents, also presents the finance bill, which actually contains the direct and indirect provisions and also specifies the tax rate. Now, why is this annual exercise really necessary? It is necessary because the Income Tax Act itself does not contain the tax rates. So the tax rates are required to be specified every year in the finance bill. Apart from that, there are a number of amendments. So actually, if you really look at it, what happens is the plans or the policies which it shares reflects the plans of the government. The income and expenditure estimates again are of 3 types. So what is the revenue receipts? What are the receipts on capital account? And on the expenditure side again, what is the revenue expenditure and what is the capital expenditure? Then this distinction is very easy or simple. So I won't bother you with the definition of revenue and capital. Although one must mark one thing, what I notice is it's not statisticians alone who play around with figures. I'm always worried when one plays around with figures. The reason is, yes, of course, you have to change certain criteria, you have to change certain definitions and concepts, no doubt, as a country evolves, as the economy evolves, and as the subject evolves. But when you do that, the problem is that the reference to the past changes. So in fact, any of you have a knowledge of accounting or are into finalization of accounts, you will realize that if there is a change in accounting policies or if there is a change in the accounting estimate or a treatment of how certain things are being done, automatically there would be a disclosure, an adequate disclosure would be given in order to do that. Instead, here there is no disclosure. So what was the change which I was trying to point out? The change which I was trying to point out was that if you look really at the capital expenditure in the earlier budgets, that is prior to somewhere in 2000 up to 2012 or so, the share of the states, or even 2014, I think, the share of the states was carved out of the budget. Now from 14, the capital expenditure which is out of the state's share is added to the capital expenditure. So if you really look at it, earlier only the capital expenditure directly incurred by the central government was included in the capital. The rest was in revenue, and whatever was the state's share was not a part of the expenditure at all. It was deducted. So it was net of state share. Now what has been done is whatever is handed over to the states is also added in the respective sections. So the budget size appears more. The whole idea being that indirectly, whatever goes to the states is also being spent on government schemes, on government plans, etc. So state funding, which is done on capital account, is included here. So that's a major change. Now that makes figures non-comparable because earlier they were not included. What is plan and non-plan quickly? Planned expenditure is the actual expenditure on equipment, on new schemes, on projects, on capital. Whereas non-plan expenditure primarily consists of the administration and the employee cost of the respective department. So if I say health expenditure is say 80,000 lakh, whatever, 80,000 crores, then in that case, out of that 80,000 crores, say the plan expenditure is say suppose 45,000, then the remaining 35,000 rupees is actually staff salaries and administration cost. So the actual expenditure which is deliverable on the programs is 45. Although no doubt without people and without administration, there cannot be execution of plans. So no one is denying that, but one must be aware of the breakup. Now, what is nominal and in real terms? See, what figures are presented in the budget are all in nominal terms. Now, I have a slide later of inflation, which I will like to show. So here I'll only suffice by saying that when you have expenditure in real terms, that means that you are cancelling out the effect of inflation in the expenditure. So if inflation is 10%, then I have a figure of say 110, I'll make it 100 because the 10% is because of inflation. So in real terms, in short, if I were to spend the same amount in year 0, I would need to spend 100 because inflation is 10%. In the next year, I'll have to spend 110. So when I spend 110, I'm really spending rupees 100 in real terms compared to year 0. That's what it means. Now, in the finance bill, this time also, there's a lot of things in the fine print, which I'll try to share some of the important ones. I think here we can move to the next one. Now, we are all aware of the term VUCA, a very popular term. So volatility, uncertainty, complexity, and ambiguity. And I believe that VUCA has got magnified even more because of the COVID pandemic. The point which I'm trying to make here is in today's world, we are a very connected world. The greater linkages, something happens in the corner of an economy, yet it has impact across the economy and also an impact globally. Apart from that, information sharing is so fast that anything happens anywhere, it's flashed everywhere through social media, through the various handles, Twitter, Facebook, Insta, and also on television. So ultimately, there is a deep linkage. And considering this and the short fuse wire of decisions, what is short fuse wire of decisions? I'll just take one example. When you are sending an email, earlier when you used to send a letter, I still remember because when I was doing my articleship, used to type and send things. So there used to be a dispatch register entry in that. And then somebody actually used to take it to the post office and post it. So, or you would put it in the post box. So if you are aware, actually, if you identify yourself and you have posted a letter, you can call it, take it back from the post box. So actually, there were many stages when you wrote the letter or dictated the letter, when it got typed, then it got put in the envelope, went into dispatch, ultimately went into the post box, and that next day morning also you could go there, stand and take back the letter if you didn't want to send it. So there were so many opportunities of revision, of change. Today what happens is you get agitated, so you send a flaming response to an email, And moment you press the send button, now of course I think Gmail or Yahoo, one of them has a unsend button, but that's available only for a few seconds. So basically, decisions are such: once you send a mail, it's gone, it's received at the other end. You send a message, it's gone. So it's not easy any longer. You have very short decision span. So we have seen that because of all this. Look at the weather. The climate also is so uncertain. Sometimes you have rain, sometimes you have sleet, sometimes you have dust storms and sudden chill when there should be none, and sudden rain, all this. So even the climate, even the weather, even the economy, there are various issues coming up. Now, what does it mean to the budget? What it actually means is that you cannot any longer say that I am going to wait till the budget to make a policy, to make a response, to do something about it. You get my point? So therefore, really speaking, what happens is, whether it is key decisions, whether it is initiatives which the government has to take, whether it is interventions which it has to take, or whether it is responses, these have to be taken throughout the year. I have just given 3 examples. There are many, many more examples. See, fuel prices. In the past, only the budget gave out the fuel price change. So annually, you used to have, okay, now I'm going to raise the price of petrol or diesel, or I'm going to reduce it, or I'm going to keep it unchanged, whatever it is. They are in a free float state. So not even monthly. Now, daily the price changes. That flexibility is given to the oil companies. So that's just one example, something which has gone out of the budget, something which was very significant. Now, another example, somewhere in the middle of the year, Udyam was launched, your ECLGS was also strengthened. So all these are happening throughout the year, and they are major initiatives, for example. Or look at establishment of bad bank. It was not incorporated in the budget. It was given before that because of thought that it's important to share it. So it was done even before the budget. So you will find many instances like that. The whole idea is this. Has any one of you read the economic survey? Please do it. So in economic survey, in fact, shares this thought that maybe in the future, you may not rely on budgets alone. Because the thing is, what is normally the response to the volatile world of nations? They go into more and more detailed plans. Well, that is not actually the solution. Why is it not the solution? Because there is this Nobel laureate Frederick Hayek. He called it, the pretense of knowledge, preparing elaborate plans. There are many people. This Nicholas Nissim Taleb had done it when he mentioned about the black swan effect. What was he saying? And you look at the past and you predict the future is not always possible. So your trading algorithms are not necessarily going to give you a rational trading on the market. There could always be fiascos happening. So the nutshell of this is that just like there is a pretense of knowledge, maybe a time has come when budget is just a pretense, because you have to present it every year, and primarily because you need to give the Finance Act, you need to give the tax rates of the next year, you need to make changes in the laws. So that part will remain, but the policy part will happen throughout the year. That's my feeling about it. Now let's take a quick look at a macro view, and then we can go on to what we intend to do. I'll just keep a track on the time. Okay, I have another half an hour, so fine, good. Now, the real growth of the economy was 9.2% in 21-22 as compared to, if you look 2 years back, I have purposely taken 2 years back because the figures for the year before that are affected by the pandemic. So if you look at 18-19, it was 6.8%. You have to look at it in that context. Although some people say that it is just a catch-up mode because last year there was not much growth. Now, if you look at inflation, that is what is worrying, and we will have a separate slide on that. The average inflation now stands at 6.3 as compared to 4.3 in 18-19. Now, have you for a moment paused and thought of the effect? What it in real terms means that those who are keeping their money in banks, especially some amount in saving banks because it is required for emergency, especially for senior citizens, and others who are keeping it in fixed deposits also, are actually losing money. And I want to point out something else about the inflation. This inflation of 6.3%, I don't know, of course, the figures are authentic if the government says so. I have no dispute about that. But probably they are WPI figures, that is wholesale price index, or the basket of currency needs revision. But when I go out, I don't know what is your experience. When I go out, I find that prices of many things have risen 10% and 12% and 15%. When I'll just give you an example, some medicine I got yesterday, Allegra. So I was surprised, it's 200 and yeah, it's 208 rupees for a strip. I said earlier, no, it was 192 or 193. So I just mentally calculated, oh my God, it has gone up by nearly 15 to 20 rupees on a 200. So that's more like 10%. And if you find all other commodities, everything, prices have substantially gone up. So I guess at the ground level, the inflation could be more like double digit or slightly more than that. Whatever may be the figures in the statistics, as they say. But in any case, there is growth. And what it means is that if you keep the money in the bank, your capital is eroding. So over a period of time, maybe 15 or 20 years, coupled with, I would say, shrinking incomes of senior citizens, they are going to have real problems. Fiscal deficit, if you look at the budget estimate of 2021, the deficit has been projected at 3.5% and the actual deficit was 9.2. Look at the difference. I have another slide which tells you why this difference arises and why it could also happen this year. Although B for 21-22 was 6.8 last year and actually it is shown as 6.9. But that again is a slay of hand. And then for 22-23, we have now a projection of 6.4. So this is a fiscal engineering. Why do I say it's a fiscal engineering? Let us come to the next slide. I think, shall we do that? Yes. So this will tell you what happens. See, how is deficit calculated, this percentage? We have it here, 6.4. How has it been calculated? I am showing that in this slide. If you look at the summary of the budget, there is a document called a summary document. On its first page itself, there is a sentence with a star given below. The GDP of 2022-23 has been projected at 147 crores. Rupees 147 lakh crore, assuming 11.1% growth over the estimated GDP of rupees 232 crores for 21-22 RE. See, what is happening here is this has started happening from the last year of, means 2013. I think that was last budget of Chidambaram. After that, the new dispensation, the new government budget started, but they didn't change this. What is done is the GDP is not taken at actual. When you are doing the budget, now this time 11.1. Nobody is saying that the growth will be 11.1. Last time, the GDP estimate, they added 14.1% to the GDP estimate to arrive at expected GDP or estimated GDP for the budget estimate of 21-22. So on 2021, they added 14.1%. And then you look at the deficit and compare it with that base, it's going to appear to be 4% and 3%. And then in reality, it's not going to grow 14% by any chance or any stretch. So there is a shortfall and the deficit grows. So if you realistically look at even 8 or 7 or 8% growth, then in that case, and you take it not on the 233, 232 estimated, but knock off 14% and replace it by 5%. So deduct 10% out of this, it becomes 200 crores. And that is, sorry, 200 lakh crores. It is my mistake. So 200 lakh crores, you now increase by even 8% or whatever, it becomes 220. And then you will have the new figure. And that compared to the deficit would be a much higher percentage. So that's what I wanted to mention. So actually the figures will be like this. There seems to be some typo error here, but doesn't matter. So on a base of 240, that is 232 plus 3%, the deficit of 16.6 crores as per B becomes 7%, which exceeds the current estimate, as well as the RE, which is 6.9. So it would be definitely 7 or 7 plus. That's the expectation, and not 9.2. Now we go back to sectoral growth, because there is another point which I wish to make. See, if you look at the economic survey, the sectoral growth is shown as agriculture has grown by 4%. Up to last year, that is up to 18-19, which was a sound year, not the affected year, even up to 19-20, agricultural sector was actually shrinking. And industry was growing, but not so much. And service sector was actually galloping ahead. Now, what has happened is agriculture, there is growth. Industry has grown by 12%, which is a very healthy and substantial increase. Although figures of capacity utilization tell a different story. If you look at CMI data, figures for capacity utilization are only 60%. And how come there is growth of 12%? That means capacity utilization before that was even lower. But be that as it may, we have a growth figure of 12, and service sector is 8%. Now, if you look at the employment levels, there is a very disturbing thing which is noticed. Actually, the employment in service sector has shrunk. It's gone down by about 20% to 30%, whereas in agriculture, employment has gone up. Agriculture with modern techniques and otherwise, you don't need that many people, and so therefore naturally the number of persons dependent on agriculture had gone down. At one point of time, there were 74 or 75% of India's population was involved in agriculture. It had come down to 50 more or less, or even slightly less. Now, again it has grown. What has actually happened? See, what has happened is that this digital push, partly things happening remotely, that is work from home, and various other things have resulted in sectoral unemployment. Well, that is how I call it. See, there is a stark inequality between haves and have-nots. Now, I'm not saying only about money or resources, but skill sets. There are some people who have the skill sets, some people who don't have the skill sets. Similarly, those people who don't have deep pockets, they were affected in the pandemic and they had to go back. So what has happened is there are people who have migrated to the villages. They have left their jobs in the services sector because service sector shrank, and they are not getting the jobs here and they find it difficult to survive here. So they have gone back to the villages, and then they get absorbed on the farm. So it's not really employment. I remember, of the book which we used to have in graduation, that is that economic development of India. So we are always told that there's something like subsistence farming. That means, as many people are born, they just get absorbed on the farm. So everyone thinks that they are occupied and they are employed, but actually they are suboptimally employed because you don't need that many people. So that is something which needs to be addressed. I'm not sure if the budget has done it, but we will look at it. Now, this is another thing I wanted to share, and then I'll move on to what has happened in this budget. If you look at it, these figures, this goes up to here. Can you see the mouse? Are you able to see the mouse?
Yes,
Yes, we can.
Yeah,
yes.
fine.
Yes, we
So
can.
this is somewhere in 74 when inflation had gone up to nearly 30%. Okay. And this currently is 6.2 or something, again rising. So if you go by charts, although I mean, it's not really charts, is what happens in the economy, which is going to push it up. But this is 6 plus. So it had gone down from, if you look at it last 4 or 5 years, it had consistently come down, even up to somewhere here, like maybe 3.5. And then it has again nudged up to 4, practically reached 5, again dipped a bit, and now it is at 6.3 or 6.4. But cumulatively, if you see, you'll be surprised that 1 rupee, I mean, like basically the rupee in 1960, if you compare with the rupee today, there's a value change in terms of 7,520%. What it actually means is that 100 rupees in 1960 are worth 7,500 today. So multiply by a factor of 75 or 80. That is what I call it. And now when you do that, you'll realize what was the exemption. Income tax exemption was 3,000. You multiply by 80, how much is it? 2,40,000, 2,50,000. That is what is your exemption today. So nothing has really much has changed in terms of that. But what has changed is that today I don't have, because those who have fixed incomes don't consider 60, even consider somewhere like 80. When a person is retired 20 years or 10 years, if a person is retired, he's going to have real problems, because the cumulative impact of even a small inflation level of 4 or 5%, when your interest rates are falling. Just take the case in 2014, what were the interest rates? They were definitely close to 9%. 9% interest being earned. Now that has become 7.4. I'm just talking of senior citizens. Just look at what is their situation today. 9 has become 7.4, and my inflation is touching 7. It may cross 7.5. So what is going to happen? And again, that 9% is only for 15. That 7.4 is only for 15. The rest they are earning probably 6%. So with this kind of a scenario, there is going to be, and they are going to face a tough time, right? So let's look at now. I think that is what I wanted to share about that state of the economy at that point of time, especially the sectoral unemployment aspect. Now, if you look at the allocation, this was the allocation in 1920. Now, if you look at 21-22, it was health care, primarily water, sanitation, and housing. If you look at the current, there is Gati Shakti, that is roads, railways, airports, just ports, mass transport, waterways, and logistics, all infrastructure pertaining to this. There's something with agriculture, the MSP. Urban planning has got a huge thrust, so is the digital thrust. ECLGCS is a good news, because otherwise because that is what now has been clarified by the finance secretary. One another area missed out, we thought, was the hospitality industry, the hotel and the tourism sector, because they are the ones who have not yet revived. ECLGCS is supposed to kind of provide funds now, that additional funding which has been done, and it has been revived, that scheme which was otherwise ending and extended by a year. That is going to provide succor for these areas. So that's what we look at. Now, primarily what it means is, this is exactly what has happened, that 8 has become 10 if you look at it, the capex, because I'm not including the state's share in it. If you add the state's share, then it becomes more, and so it will become 11. So that 1 extra makes it 35% capex. So this is how the things have happened. And now you'll realize that our revenue receipts, that is the net tax and non-tax receipts of 22, and other capital receipts, which are not in the nature of borrowing, together they are 23, and that 23 barely meets the revenue expenditure of 20. You get it? Now, net tax means after deducting the share of 2,50,000 2,50,000 crores, I think, which goes as GST compensation cess. So the net is 22 here. This 22 plus 1 is actually 23. Borrowings are 17. So my logic is this, that 23 just meets 20. So basically your capex and your interest. Look at the interest. Here it is, 1 minute. 10. So 10 and 10, 20 is going out of primarily borrowings and liabilities. So the country is borrowing and keeping that deficit. The three difference is the deficit actually. So borrowing and deficit finances your capital expenditure and even interest servicing. So if you were looking at it as a corporate entity in the private sector, you would say that it is not viable because it is not able to service the debt, which is a fact. Debt servicing is not something which countries are very keen about. So what does this Amrit Kal now mean? 75 to 100 years. Capital expenditure is expected to drive private investment through pump and prime. Now, without mentioning Keynes, the government is banking on Keynesian economics. Now, it's quite a happy scenario. I mean, there's no problem in banking on Keynesian economics because it makes sense in the sense that if you put in infrastructure, capital expenditure, the expectation is that it will drive private enterprise. Now, yes, there is evidence, some evidence of that. What is that evidence? That if you build a new highway, then all the areas connected, they may be rural areas, hinterland, etc., where the highway goes, they find a rise in economic activity. You immediately find an increase in incomes and increase in expenditure also. If a railway line is started, you find the same thing. Property prices go up, so many things happen. So it drives private investment, no doubt, because private investment is shy of building infrastructure, especially the kind which you get roads and all. So what do you then find an issue in trying to adopt Keynesian economics? Two things. The first is what Lord Maynard Keynes had done was, he had said, even if the government digs holes in the ground and pays money to the people to dig them and fill them up, even then that will boost the economy. To an extent, right. But when does it happen? It will happen only if private investment follows suit. Unfortunately, private investment is not driven by sentiment. What they will look at is what is my IRR and how does it compare with my cost of capital. So only if my IRR exceeds my cost of capital, I am going to come in and invest. And just now you will see private investment is not forthcoming. They are not even borrowing at the low rate, whatever rate of interest is available. That is what is. Look at the statistics. That's why when you look at the budget, you have to also look at contemporaneous statistics. What has happened to the two-wheeler sales? Two-wheeler sales have gone down. They are consistently going down. So that's an issue. Okay, so what will happen then because of this kind of a deficit and this kind of a financing where the expenditure, because see, when the expenditure goes in infrastructure, it doesn't directly put disposable income and goods in the hands of the people or in the economy. That means that the generated demand is going to drive prices up. So there will be inflation in the short and medium term. So that's going to be a problem for those sectors which I mentioned, that is have-nots and the senior citizens. So that's why I say that what are the misses? First is health is a miss. I have a chart. I'll show that to you if there is time, because I want to cover in 15 minutes at least some of the tax proposals. Not because I won't be covering them in great detail, but I just want to show what happens. So my point is that in real terms, if you see, because there's another thing, if you look at the actual expenditure compared to the budget estimates, it has always been less by 8 to 10%. Because what has happened is, especially in the last 2 years, almost everything has gone into food. See, free food was provided. So food has gone up by about 400,000 crores. That is at 4 lakh crores. Food bill has gone up. Similarly, what has gone up is some rural support. All those things have gone up. And because of that, expenditure in other industries has been slashed. So you find health actuals much lower than budget estimates. Education actuals much lower than budget estimates. Even if you assume a 10% drop, the 1,04,000 crores which is proposed this time is going to be actually something much lower at 94 or 95. And for this health and for education, what is touted at 98 or 99 will actually go back to 85. So these two areas seem to have been missed. Why I mentioned this? Because you had the national education policy in December 21. We had thought that something concrete will come for that. But apart from a digital university here and there and some kind of online teaching and awareness, and same thing for health, there's not much seems to have been done. Employment, yes, infrastructure will generate employment, but we have to see how much, because you have to consider the issues of have-nots who are at the bottom of the pyramid, who are not skilled enough, and of course the woes of senior citizens. Now I come to the direct tax proposals quickly. We have another 15 minutes now. I hope so.
Yes.
Yes, you may
Fine.
continue.
So I'll go reverse in the slide. The devil is in the fine print. So what is the devil? There are as many as about 8 or 9 retrospective amendments. We had thought the finance minister and the government of the day had made it clear that we will not amend the law retrospectively. Now, what I find is what appears in the budget, the handiwork of bureaucrats, which has not been seen by the politicians and the ministers and the cabinet, because this goes to the cabinet also before releasing, or whether they are not bothered. Because in the tax proposals, yes, there was one sentence thanking the taxpayer. But what is the first thing which I noticed was, look, there was such a fiasco. So many times the date were pushed forward, and that whatever you call that online website, which was earlier functioning fine, has given so much trouble, caused pain to various sets of cross sections of people. I thought at least there'll be one small word put in by the finance minister in the speech saying that, well, we had some teething troubles. At least acknowledge that, and say that you will improve it and iron out everything. But after launch, 6 months, people are struggling. Even today, I was uploading a return. It says the facility of entering UDIN is not yet available. So if your website is not fully functional, then what are you actually saying about it? And you don't say anything about it in this. Anyway, so along with that, there are retrospective amendments. I'll come to that. And why are they? They are for systematic reversal of court judgments. I'll give you an example. The court holds certain expenditure allowable. I'm specifically pointing at that 43B. 43B now says that if industry, anybody has taken a loan, and if that loan is, the interest on that is not paid, it is not allowed. That is the law. So that's fine. There's no issue. What happened was, there were certain sick industries where the loan was restructured. So therefore, the interest component which was payable was converted into another loan. Now that's a deemed repayment, because what happens is you are disbursed another loan technically, and the interest is paid off. So the interest becomes another loan. So the court naturally held that yes, this is allowable, and that is the right spirit. What is the amendment? I want to read that specifically, because the memorandum explaining the provision, it's so badly worded. One starts getting a feeling that taxpayers are not really wanted. I'm just reading this. Clarification regarding deduction on payment of interest only on actual payment. Now, certain taxpayers are claiming deduction under section 43B on account of conversion of interest payable on an existing loan into a debenture or on reconstruction on the ground that such conversion is a constructive discharge of interest liability and therefore amounted to actual payment, which has been upheld by several courts, and rightly so. Now, will you say that a person, a company which is sick and which gets its loan restructured, is it doing something which shouldn't be done? It is something which should be done because it is trying to revive itself and it's a genuine business. Now, what does the next clause say? Such interpretation is against the intent of legislation. The section was introduced to curb the mischief of claiming the deduction by the assessee without paying interest to financial institutions, NBFC, scheduled banks, or a cooperative bank, etc., etc., etc. So, in short, what it means is that people who are sick and they are trying to get their loans restructured and then naturally, justifiably, as supported by the courts by their interpretation, claim that interest now constructively paid as expense are committing mischief. That is what it means. That is what the government means. These are very harsh words which are used. And this is a retrospective amendment because of the court judgment, and it takes effect from an earlier date. Similarly, there are other such amendments also where a lot of court decisions have been reversed or negated. And this then starts giving a feeling as to whether really such people are welcome. So I'm coming to section 68, another amendment, where it says, it's called a rationalization section. What it really says is that the source of the source, under section 68, unexplained cash credits are added. That means if you have a credit in your account and you're unable to explain the source, that is, give the PAN number and the name and address of the creditor or the lender, and you also have to show the credit worthiness of the lender. That is what the court had put an onus on, and that is what is being provided by people who borrow. Now, what has now been done is that this is not enough. They say the taxpayer has to explain the source of funds in the hands of the creditor. That is, suppose X has lent me money, then from where X got that money also has to be explained. It is not sufficient that he is a taxpayer. It is not sufficient that he has a PAN. It is not sufficient that he has filed a return and it shows the loan given to me. It is reflected there. And it is also not sufficient that he has capacity to lend me. So if he has lent me 10 lakhs, means his income is more than 10 lakhs and he has credit worthiness or balance of maybe 1 crore of rupees, then he has lent me 10 lakhs. I have established all this. Even then now they want to know what is the source of that 10 lakhs, and I have to explain what is the source in his hands. And I just want to tell you what are the words used. The words used are very bad. They said that, I'll tell you what the words used are, and that really make it dicey. I'll just go to that clause. Just give me one moment. I'm looking for it. Rationalization 68B. 1 minute. Is the section. No, the words used something are 1 sec. Where did it go? Just give me a moment. Entry provider. What it says is the assessee has to explain the source in the hands of the creditor or entry provider. Now, my thoughts which I am trying to share is it shows an attitude or a mindset of the bureaucracy. How can you label every assessee as an entry provider? I mean that he has got the amount from an entry provider and it is not a real loan at all. I mean, say in the hands of the creditor, that's fine. You can't say in the hands of the entry provider. So, you have, even before the assessee submits the details, decided in your mind that he is going to not reveal his real income and he is using all kinds of illegal and tax evasion stuff. So basically what happens here is that you have reversal of court judgments, you have amendments which increase the onus on the taxpayer in the name of rationalization. So I say that devil is there in the fine print. There are 2 or 3 very good introductions which have happened in the budget as far as tax is concerned. The 3 actually, and I'll only discuss those 3. We have still another 5 minutes. So first is updating tax return. Now this is a very kind of, I would say, a very significant and a revolutionary proposal. Somehow what had happened is that earlier you had enough time to file a return, and then you had enough time to file a revised return. You had a 3-year time. To give you an example, if my return of this March 22 is now due by March, otherwise actually it would have been due by October, but if I want to revise it in the old regime, I could revise it within 1 year. That means if I file the return in March, I could file it, revise it within 1 year or before the assessment is completed. Because once assessment is completed, you can't revise it. So I had 1 year's time. I could file a revised return, or I could file a return which I have not filed to claim a refund up to 4 years. So it was that much time. Then everything was whittled down, and ultimately now they said you can file your return only if your 31st March means before December you have to file a return. Beyond that, you can't file a return at all beyond December. At the most, with fines, penalties, etc., you can file it up to March. And if you want to revise it, also you have to revise it by March. That is everything within 1 year. After 1 year is over from the end of the assessment year, I mean, end of the financial year, you can't do anything. So March 22, you can do anything up to March 23, not beyond that. Now what is being said is that after all this is over, suppose you find that there is some income which has remained undetected, there is something which you want to give. If you file it within 1 more year, you pay 25% extra as fee. So whatever is your tax and interest which you have to pay for the delayed filing of the return, that of course meter will be on, and whatever you have paid as advance tax, etc., everything will be deducted. So whatever is nutshell the balance self-assessment payable, because you show more income on that amount and the interest on that self-assessment, you pay 25% more and you get a 1 year's time. And if you file it in 2 years, because it gives 2 years time, then you have to pay 50% extra as fees. But at least now I say a window of disclosure has come up. Because if you look at the AIS statement, quite a few of you must have struggled with it. That is the annual information statement. It gives detailed transactions, and quite a few of them are either duplicates or wrongly reported, or there are mismatches in it. So it's not easy and you may miss out on something. And if you do, then you have 1 year's extra time paying 25% extra fees, 2 years extra time paying 50% extra fees. So this is a very significant amendment which has come, and I think people should take advantage of it. Now the next one is extension for startups. So what has happened is startups had to start functioning by March 22. So practically it was getting over in the next 2 months. So they have been given a lease of life. You can do the startups for 1 more year extended. And for new manufacturing companies which are established, see, nowhere in the world you have a 15% tax rate for manufacturing corporates. Here you have that for new manufacturing companies, but they have to start production by March 23. Now they have extended by 1 year. You can start production by March 24 because it takes time to set. So that's another 2 good provisions which are there. I'll come to the last provision now, that is taxation of virtual digital assets. This is something which has come out of the blue. People were in fact toying with the idea that bitcoins may be banned and all that. So the younger generation must be very happy, those who deal with Bitcoins. And I mean, like, it can be done at any point of time. You can even go to the washroom and do it. You can do it anywhere. So, but now it's going to be taxed and it will be a rough time tracing it. There are two things I want to point out. The first thing is that there will be a tax deduction at source at 1% on all transactions. So if there's a transfer, buy or sell, then every time such a transfer happens, 1% tax deduction will have to be done, and that will in the name of the person. So in short, now transactions, whoever is transacting will have to reveal the PAN, because if that is not done, what will happen? Can anyone tell me? Two things will have to be done. All those who deal in Bitcoins, they will have to have a PAN number and they have to reveal it. So the linkage will automatically happen. And the second thing is they can't afford to not file their returns, because TDS is a very funny thing, tax deduction at source. 1% TDS is specified for tracking. But if you do not give your PAN number, then the TDS rates under section 206A becomes 20%. So the person who's paying you that exchange will deduct when you convert your Bitcoins into rupees, or even otherwise, when you buy or sell, you will face a 20% tax at TDS stage itself. The second thing which happens is, if you do not file a return for 2 years, your TDS, which the other person is going to do, increases to 20%. Now, in this budget, that 2 years has become 1 year. So if a person doesn't file a return for 1 year, and he's the recipient, then the payer will, if he pays money to a recipient, he has to check, has he filed the return? If he doesn't file it for 1 year, TDS will become 20%. So that's one area for Bitcoins. The second one is that Bitcoins are going to be taxed at 30% without any deduction, without any exemption. You can't set off any business loss, nothing you can set off against it. It is standalone. It is not even capital gain. So even surcharge will be the maximum surcharge, not restricted to 15%, because long-term capital gain surcharge is now restricted to 15%. But it is not defined as a capital asset. It is defined as a virtual digital asset, which is separate. Of course, now people who are in industry are demanding clarity, because the only thing clarified is that digital currency is different. Virtual digital assets are different. They are more like an investment or Bitcoin. But in defining this virtual digital assets, the net has been cast so wide that intellectual property assets, digital assets of corporates which have value, will also be classified as digital assets. So tomorrow, the what shall I say, the tax gatherer or the department people who are over anxious and bend backwards, and who always keep thinking that taxpayers are cheaters somehow. That conception should go away. Actually, taxpayers are customers of the tax department. One has to really try and see how they will think of or look at it that way, but I don't see it happening immediately. So the point is that these virtual digital assets could be taxed at 30%, although they are not Bitcoins. What is intended to be taxed? Only Bitcoins. One last take on this, that what it has actually done is, whatever may the finance minister or the secretary may say, recovering tax on it has lent some kind of legitimacy to Bitcoins in the minds of people or in the minds of investors. Already you see volumes picking up, because now people feel, oh, if I'm going to declare them, I'm going to pay tax on it, and I'm going to give my PAN number for it, then it's going to be something which is going to be pretty official, right? So I think I'll stop here. There's just one word I want to share in the end, which is not about tax. That is that going forward, one feels already, this 1,40,000 GST, I just wanted to point out that I see in the next 5 years, it may even become 2.5 lakhs. You know what is the reason? Because direct taxes are paid by only a fraction of the people. In fact, no finance minister, no government can touch rural, especially agricultural sector for collecting direct taxes. And your requirement of expenditure is going to go up. Already both are neck and neck. If you see direct and indirect tax, that is GST. So what I feel is that GST is something which everyone pays. Not a single citizen of India is there who says, I don't pay GST. It's an indirect tax. So, and another thing, GST is collected in an arm twisting way, in the sense that it's a compulsion. I have e-way bill, I have everything. No way in which you can avoid it. It all shows up with the cross connections, and they are making it more and more tighter every day. So what is going to happen is, another few years down the line, the GST is going to be the mainstay for collection. I just wanted to say that. Customs, of course, they are rationalizing, so it's a very good idea. I think what one needs to do is, whichever industry, whichever area you belong to, try to look at what the government is planned to do and try to get the maximum benefit of it by trying to shift your business or trying to do that, trying to do what the government intends you to do. It's indirectly a signal by the government that get into these sectors, because this is where the future lies. So the digital thrust, as well as what you see in terms of infrastructure, are really the areas which will give us Amrit Kal. That's what I feel, I think. So I think, thank you. If you have any questions, you can ask me. Can I stop sharing the screen? Or
Yes, sir. Yes, sir.
Right.
And
thank you.
Thank you very much for such an informative session, which was much more and going beyond the numbers, and it is more talking on the concepts on which the government works on the budget and what it means to the businesses as well as to the common man, which is more important. So I will request the participants that you can put the question in the chat box, or you can raise hand and ask the questions. In the meantime, I had one thing, that from the tax simplification point of view, do you think, are we on the right track? Or because still, if I have to file my own tax, as a common man, I'm just asking.
Yes. Okay. See, actually, they tried that, but it didn't work. It didn't work partially because of the problems which they had with the portal. But their thought is this, that the information collected in respect of all the financial transactions of assessees is so comprehensive that they are planning that they can give every assessee a pre-filled return. So what happens is, you just have to download the return. I mean, when you go to try to fill your form of income tax, it will be filled up in advance with the various figures. Because what is it actually? Salary. Salary will be completely revealed, including the perquisites by your employer. You have income from house property. Now, what has happened is that if anyone is paying rent, if it is a reasonably substantial amount of rent, 50,000 rupees, not much. If your rent exceeds 50,000 rupees, there is compulsory TDS. So that will automatically get filled in your return. You have your business income, there is TDS on everything. So moment your turnover exceeds a certain amount and the thresholds are very low, you have a professional fee exceeding 30,000 rupees from anyone, TDS gets deducted on it. If you have a contract above 30,000, TDS gets deducted on it. If you don't do a contract and you do freelancing, moment you exceed 75,000, now it's 90 or 1 lakh, you get a TDS on it. So business income, professional income, fully covered. So that will get reflected, your gross receipts. If you're paying GST, your GST turnover is revealed in your income tax form. So they'll say you have this much turnover, your presumptive tax is so much. Now you come to other sources, anyone and everyone, wherever there is a payment of more than 10,000 rupees interest, there will be a deduction. Apart from that, banks now share all transactions which are major above a certain threshold with the department. So cash withdrawal exceeding 2 lakhs in the whole year reported, cash deposit reported, any financial asset which you buy more than 2 lakhs reported. If you do foreign travel more than 50,000 reported, you buy a car more than 10 lakhs reported. So everything gets populated in the return. So auto population will come in. Second thing is litigation. So that they are trying to see that it becomes arm length. Only problem is this faceless is actually creating a problem. So I mean, what I'll do is faceless actually would have worked well. In fact, we had high hope on it. Problem is that it is faceless from one side. So the department has now become an impervious screen. So if there is something which immediately needs to be flagged or brought to the notice, we can't do that. Whereas for them, we are not faceless. They know everything about the assessee. We don't know who those people are. I'll give you an example. You cannot communicate in any other way except through the portal. So there is a case, and that is not an isolated case. Many people have experienced it. They send a notice, you file a reply. They send another notice, you file another reply. They send a third notice, you file a reply. Fourth time, you get a notice saying that you have not responded to the earlier three, so show cause why penalty should not be levied and we should not complete the assessment ex parte. Oh, where will I inform? So now my only solution is I raise a grievance on CPgrams, that is directly to the PM. That look, I have responded 3 times. These are my acknowledgements. This is my document identification number. I have screenshots that I have uploaded everything. And here is the faceless assessment procedure telling me that it's not received, you have not responded. So some exasperating situations like these arise. So there should be some way in which the assessees also are able to contact. So there should be a emergency helpline in terms of, although it's faceless, there should be an identifiable face who the assessee can connect to it. That's, I mean, but these will get ironed out. So actually compliance will become easier, but provided you plan your taxes rather than resort to avoidance. So that's my take on it.
Thank you, sir.
Right, sir.
Yeah, thanks. So before I move on to the next, if everybody can put on the cameras for with a smiling face for a good photograph, that will be a nice thing for us. And sir, we can also move on that somebody, Mr. Mitul Vartak has a question that is faceless assessment is done to avoid corruption?
See, the idea of introducing faceless is twofold. One is, of course, definitely, if there is lesser contact or lesser interaction, then the chances of illegal gratification, so or what you call as corruption, would be reduced, and so therefore there would be a better situation. The other aspect of faceless, why they thought faceless would be good, was that the whole idea down the line is that more than 90%, or I would say 95% of the tax cases are going to be accepted as they are filed. So there will be no scrutiny at all. So the scrutiny would be minimal. Now, given that information about transactions has become so transparent and available today, it is not really necessary to call the assessee and ask for his explanation, because all the figures and facts are now directly available with the department. See, why was across the table assessment required? Because you had to take your books of accounts to the income tax office. If you remember the olden times, people used to come with, sack full of books and vouchers and things like that and show them. Today, what has happened is I have a digital payment. So I don't have to show the vouchers. There's enough and ample proof that the payment has actually been done. It is flowing directly. Once digital currency comes, so even cash payments will also have a trail. So it will be foolproof. So question of disputing a payment does not arise. Earlier, what was the fear of the department or the tax gatherer? That expenses have been inflated. Now, that kind of a thing is not possible, in the sense that it won't be possible for me to not spend money and show that I have spent money. So therefore, vouchers, books are now not required to be seen. So what is the need for going physically there? And we have provided for interaction like this. Now, is it necessary for us to meet physically for this lecture? We could do it well even without physically meeting. So the assessment happens the same way. Your assessing officer will come before you on the screen if you ask for a personal hearing. That is what they are providing in this amended faceless assessment procedure. They have made some changes to take care of these grievances. Now, when you ask for an hearing, you will get a person who will be standing at, sitting at the other end of the camera. You will get a recording of your interaction also. So in short, whatever you have spoken tomorrow, you can present it in the court of law. That, look, this is what I have answered. This is what the assessing officer has said. Now you decide what it is. So actually it goes one step better maybe. Right. So I think that should take care of it.
Yes.
Any more questions? I think not many.
Has questions? And
it's actually a good idea. Either it means that they have understood it, or maybe what I said was Latin or Greek.
No. I think it was very simple. It was very simple because we are getting so many thanks in the thanks in the chat box.
Right. Yes.
MD Agrawal sir wants to say something. I think we are hearing him.
Yes, sir. I was just going to come to that, sir. You are there. You would like to say something.
अरे MD sir, आप कभी आए?
आपका लेक्चर सुनना होगा.
You logged in, okay. It's a nice surprise.
2-3 मिनट मिस किया.
He's one of my mentors. Our association goes a long way. Right from the times when he was president of computer. In fact, even before that, when you were chapter chairman, तब से और बाद में mentor of the chapter, तब से we know each other and things are happening. So very great to have you.
राजेश जी, इनको विष्णु कनारे साहब को, डॉक्टर विष्णु कनारे साहब को आप टीम में लेके आइए नेक्स्ट ईयर.
बिल्कुल आएंगे सर.
और नहीं ये माने तो मुझे बताना.
नहीं, मैंने पहले ही नोट कर लिया है. एक तो सबसे पहले इनको आर्टिकल के लिए तो मैं बोलने वाला हूँ सबसे पहले ही.
तो उनका बाएं हाथ का खेल है, वो तो लिखते रहते हैं, क्योंकि एक तो उनका ऑफिस भी बराबर बाजू में ही है आपके. एक्चुअल में क्या है डॉक्टर विष्णु, एवरीबडी कीप टॉकिंग वेरी हाई अबाउट दिस बजट, दैट बजट. आई वे ओनली बजट एज ए कॉमन मैन, because I am part of a BPCL retired WhatsApp group that what is our fear. Fear is that as you rightly mentioned, the inflation is increasing, but the capacity to earn after retirement is only some few people are having the capacity, but 95%, 96% they don't have capacity. Only sometimes their children help them, So that part, I think, is a moral responsibility of the government. If we say that the welfare society or welfare government, then they should take care of that, which is not happening in our country, unfortunately. We keep talking very big. I appreciate the government, that country is rising, country is doing wonderful things in many areas. That is one thing which you have rightly pointed out. And this digital, the story they keep talking. I teach digital transformation. This is not fair. Let me tell you, this government keep talking about digital. This is something which is generic now. Why you are so much in the budget speech. You are mentioning about digital. This is known fact. Now what is there though? That you have to spend time in budget speech of finance minister talking about digital university. That this is something, technology is there. Now we have seen that. This is what the technology is going to bring. Has to come in our daily life. So government is there to spend money, whatever, to facilitate the rules and regulation. So I think the brighter side of the budget is many, but there are few the inequality kind of thing, which some people are mentioning,
Very true.
opposition is taking chance, which is can't say completely no. That is very, very bad thing. It's been out of 100 rupees earlier, out of 100 rupees, 30 rupees used to go to some rich people. Now, if you see the kind of growth of these rich people, now 70 rupees is going to rich people. Then you and me, who are the part of this other group, is becoming poorer in terms of the inflation. The effective
Very
value
true.
of the money.
No. In fact, I'll echo yours. I'll just add two things. What you have said is very true. Look at the senior citizens. There are three more points. First is that they, after 60, or maybe definitely after 70, they cannot get mediclaim. They don't get mediclaim. They don't get insurance. That is the second thing. And they cannot be gainfully employed because you have kept the retirement age. You look at the US, what is the retirement age? And what I say is, look at the politicians. Are they retiring at 60? They become politicians at 60. You retire ho jate wo when they pass away. Only then. 75 years, 80 years, 85 years also they are working very fine. So then why this kind of a stepmotherly treatment to senior citizens? Because what has now happened is they don't have free hospitalization, they don't have social security, nothing. And at the same time, you are denying them all these. Then it is, as I see it, there is going to be intense pain down the line because rates of interest, we will see now on 8th of this month, the RBI policy will come. So we'll get an indication. But interest rate बढ़ भी गए, so I don't think they will. And if they will also, it will be maybe half basis point, not more than that. So, 0.5% will go up. That is one. Second is about the digital, क्या है मैंने notice किया है. ये टाइम सब चीज जिसमें कुछ किया नहीं है ना, वे एग्रीकल्चर में कुछ खास किया नहीं है तो वो डिजिटल इनिशिएटिव एंड ड्रोन बोल रहे हैं. सेम वे एजुकेशन में कुछ नहीं किया है तो डिजिटल यूनिवर्सिटी करेंगे. सो दे यूज डिजिटल वर्ड व्हेन दे हैव नथिंग एल्स टू से, क्योंकि डिजिटल डेवलपमेंट्स एज यू राइटली पॉइंटेड आउट आर हैपनिंग इन एवरी फील्ड. सो दैट्स हाउ इट इज. राइट सर.
No, one good thing, Dr. Kavita and Dr. Rajesh ji, about Dr. Vishnu is there. He is very versatile. He's not scared of bringing out his open mind. Many people they know the fact, but they will not speak the fact.
True.
But you can see how Vishnu comes out, and his way of talking. He's a great teacher also. Okay.
Yeah,
You may not be knowing Vishnu is a teacher for cyber security.
So, I read that he's an expert on fraud.
Cyber security. I have invited him a number of times.
Right.
साइबर सिक्योरिटी का प्रोग्राम कराइए विष्णु से.
उसको प्रोग्राम कराएंगे.
हाँ, अभी थोड़ा पेंडेमिक को ओपन हो जाने दो.
Yes.
आप इन पर्सन भी करा सकते हैं विष्णु से.
Yes, sure.
MDP kind of thing.
Yes, वहाँ पर कराएंगे.
Okay, so I want to take leave. Thank you very much.
Yeah, thank you.
Right,
Thank you
sir.
very much.
Thank you.
If there are no other questions, I think then I will take this opportunity to thank Dr. Vishnu for sparing time for our association and informing the members and also participants about the fine prints of the budget. And we will look forward to much more interactions. And as Agarwal sir has said that we would like to be more engaged with you, I'll talk to you personally. Kavita ji and myself, both of us will talk to you separately on that, sir.
Right, sure, sir.
Thank you very much. Yeah, thank you.
No, thank you all of
And,
you. It was a delightful session. I mean, I was happy interacting with all of you. Right. Okay.
Thank you so much.
Right.
Thank you. We look forward to many
Thank
more
you.
sessions.
Thank you, sir.
Yeah. Thank you. Thank you, ma'am. Okay. Shall we close the window?